Welcome everyone to our budget 2022 on payroll related topics. Just to introduce myself, as Lisa said, I am Aine and I work here in Paycheck Plus as the assistant payroll manager. I'm joined tonight by my colleague Niall Clarke, head of client system solutions. There will be an opportunity for a Q&A at the end of our webinar, but if you have questions throughout, if you want to pop them in the chat function or unmute yourselves when we get to the Q&A, that's no problem either. So just in the famous words of our CEO, Anne Riley, no business likes surprises, especially when it comes to payroll. So we like to ensure that everything runs like clockwork. That's why we pride ourselves in having KPIs of 99%. We pride ourselves in being accurate, on time and fully compliant. So we're absolutely honoured and delighted to be presenting this webinar tonight on all things payroll from the budget. I'm sure, like the rest of you, we've spent the day analysing and digesting all the information that Pascal and everyone announced today. So Niall has kindly put this together and we'll be presenting that throughout the night. But firstly, I just want to start off by thanking you all for joining us this evening at 7:30. I suppose it's out of hours, so thank you very much. We really do appreciate it. And without further ado, I'll hand it over to you, Niall.
Perfect. Thanks very much for that intro, Anya. Welcome along, everybody. Hopefully everybody is settled down now. It being shortly after 7:30. We've got a cup of tea, coffee, or even maybe some of you might have something a little bit stronger to hand. So just to let you know, the topics that we're going to be covering are listed here. So we're going to be covering the minimum wage, social welfare benefits, standard rate cutoff points, tax credits, PRSI, USC. We're going to go through some and demonstrate some calculations to demonstrate the changes for those taxes. We'll speak about COVID supports, particularly EWIS and the PUP payment. We'll cover off benefit in kind, SARP and any other topics. And although statutory sick pay and gender pay gap weren't covered in today's budget, we will do a slide or two on those at the end because it is something that's going to be coming down the pipeline for 2022. So I'm going to kick off with presenting the slides, guys. I'm just going to switch my camera off, if that's okay, just for the purposes of the presentation, and I'll switch it back on when we get to the end for Q&A. Perfect. So just to start things off, so it was announced in the budget today that the minimum wage is going to be increased effective the 1st of January by 30 cents. So it'll take it from what it currently is of €10.20 per hour for an experienced adult worker, and it'll increase that to €10.50 per hour. And below that on the slides, you can see the increases for those aged 19, 18 and under. Just to compare that increase then of the 30 cents to bring us up to 10.50, we're still a good bit off the living wage here in Ireland, which is currently deemed at €12.90 per hour. And although there's a number of employers in Ireland that have committed to paying their staff this, it's not associated with the national minimum wage above. So there's no connection to it. But look, I suppose the fact that it's gone up a little bridges that gap between it at the moment. Social welfare benefits. This list could have been several slides long, but I thought we'd keep it kind of concise to those most important to payroll. So as we can see here, we've listed out maternity, carers, parental, paternity, parents' leave, etc. So all the social welfare benefits listed here will increase by €5 per week, and that change will be effective from the 1st of January 2022. And you can see the various standard amounts from 2021 and the €5 per week increase at the end of the slides there. Parents' leave then, I suppose, is the other thing that was mentioned. It's the bottom one there. So currently it sits at 5 weeks. And it's going to increase to 7 weeks, but that's not going to be effective until July 2022. And a €5 increase on other weekly welfare payments will be applied too, with proportionate increases for qualifying adults and those on reduced rates of payments. We just couldn't cover them all here, but hopefully these are the main ones that will be particularly important from a payroll perspective. Standard rate cutoff, I suppose another welcome move. So just to explain, the standard rate cutoff, guys, is literally the entry point at which you move from the lower rate of 20% tax into the higher rate of tax of which is currently at 40%. So it was announced today that the standard rate cutoff for all will increase by 1,500 per annum, and again, this will be effective from the 1st of January 2022. So you can see there on the slides there, single, married couples with one income, married couples with two incomes, etc. So they'll all be uplifted by 1,500 quid per annum. Tax credits again. So we've listed the three main tax credits that were announced on today's budget, and these will get increased across the board at €50 per annum. And again, this will be effective from the 1st of January 2022. So the personal tax credit, which everybody is entitled to, that's going to increase by 50. The PAYE income tax credit, which will increase by 50 as well. That obviously only applies if you have PAYE sources of income. And then the earned income tax credit as well by another 50. We didn't cover a full list of the tax credits, but they can be found available on the revenue website. We wanted to particularly focus on the three main ones that change from a payroll perspective. And then just a little note that's there at the end in relation to the earned income tax credit. It's for people with earned income that do not apply for the PAYE tax credit. So this is pretty much applying to those carrying out a trade or profession that are self-employed people. And you can't get both. That in relation to the combined impact of them being more than the 1,700. So PRSI, there wasn't a huge amount of information mentioned about PRSI by the ministers today in the budget, but one of the main things that they mentioned was from the 1st of January 2022, the weekly rate and the weekly threshold for the higher rate of employers' PRSI will increase from currently 398 per week to 410 per week. And again, that increase in the threshold is to take account for the increase in the national minimum wage. Employers' PRSI Class A will remain as it is, the lower rate of 8.8% and the higher rate of 11.05%. And there was no mention of any change to the PRSI credit of €12 on gross weekly earnings between 352 and 424. Maybe something will follow on that one. But the main thing I suppose to mention here is the employer's threshold for entering the higher rate of PRSI. It's gone up to 410, again, as I said, to account for the increase in the national minimum wage. USC again. So from the 1st of January again, 2022, USC will apply to the following rates for those earning in excess of 13,000 per annum. The ceiling for the second USC rate band has increased to 21,295, up from 20,687, which it was last year. The first rate, the third rate, and the fourth rate will remain as is. Similar to last year's budget, it's only the second rate that'll change. And again, that's to take account for the national minimum wage increase. Medical card holders and individuals aged over 70 and those with aggregated income that does not exceed 60k will pay a maximum rate of 2%. That remains as it is, and non-PAYE income in excess of 100k is subject to USC at 11%. That 3% surcharge hasn't changed from the budget this year either. So into the calculations, I suppose. So for this first calculation, we've demonstrated a single person with an annual salary of 38,000 per year. And we've basically just shown the impact or the changes that the increases in the thresholds and rate bands and credits will make from last year compared to this year. I'm not going to run through the numbers in much detail, but if you can just cast your eyes to the bottom there, just to show the total difference between 2021 and 2022. So the annual disposable income in the hands of the employee in this example of 38k will be an increase of around 415 per annum. And again, that's broken down monthly and weekly. So kind of comparing this to last year's budget, which only saw an increase of annual disposable income of approximately €15, I think we'll agree that that increase is welcome considering the modest changes compared to last year. On our next example, then we're showing an example here of a married couple with a combined income of 75k. So one with 45k per annum and one with 30k per annum. And again, I'm not going to go into the details in the calculations there, but we can see the tax has gone down with the measures that were brought in from today's budget. PRSI stays at the same because these incomes are already over those ceilings, and USC has decreased as well from rate 2. So again, we can see here at the bottom that the annual disposable income has gone up by 830 per annum. And again, comparing this to last year's budget with the same figures, it was an annual disposable income increase of €10. So again, welcome changes and considering the modest changes from last year. EWSS and PUP. So here are some facts that were presented to us today on the budget. So EWSS will remain in graduated rate until the 30th of April next year. So it is going to be extended until the end of April next year. October and November will see no changes to the current rules and rates. December, January and February, there will be two rates applied, one of €151.50 per week, and the other one, the higher one, being 203. In March and April of next year, a flat rate of €100 per week, with the reduced rate of employers' PRSI, which is down to 0.5% at present, no longer applying. So that change to the employers, the reduced rate of employers' PRSI, will kick in from March for those last 2 months. The scheme will also be closed to new registrations or new employers registering for the scheme effective from the 1st of January 2022. And in relation to PUP, PUP is to be phased out by February 2022 and aligned with job seekers payments. So the PUP payment will finish 2 months before the proposed ending of EWIS at the end of April. Benefit in kinds. Not a huge amount changed here. So no changes on the basis for determining benefit in kind were announced in the budget today. So it's still based on the open market value of the car at the relevant percentage based on the annual business mileage. What was changed was, I suppose, the benefit in kind exemption that was introduced from the 1st of January 2028 for electric vehicles. This will now be extended to 2025. With a tapering effect on the vehicle value from 2023. Now, we don't know the specifics exactly about that tapering, so further details of the tapering values will follow. Currently, no BIK is applicable on an electric vehicle where the OMV does not exceed 50k. SARP, the single assignee relief program, again, no changes announced here, so it remains as it is. So SARP and the foreign earning deductions will remain in place until the end of next year, 31st of December 2022. There was no further announcement of the extension after this date. Some other topics that we want to discuss here is, I suppose there's a lot of us that were probably waiting to hear any announcements in relation to a pandemic bonus, but the proposals for such a pandemic bonus are to be brought forward, or to be brought before the cabinet in the coming weeks with an announcement to be made in due course. So again, guys, a little bit disappointing, but we won't know anything probably until maybe early next year. The state pension is to rise by €5 per week as well. And I just want to pay particular attention to this one for employers and anybody actively doing payroll. It's just a little reminder, it's a little tip for everybody. Usually these social welfare payments, especially the state pension, they typically, when the increase is applied, they're typically effective from around about the end of March. But this increase is going to be effective from the 1st of January. So for anybody that's involved in public sector pension schemes or defined benefit schemes, just be mindful of this change being effective from the 1st of January 2022. What I mean by that is generally those type of pension schemes apply a formula to account for state pension amounts. So just be mindful of that. If you're operating any of those pension schemes, that you're going to have to potentially look at that part of the formula, which will take in the state pension or an abatement amount for the defined benefit schemes. Also to note there as well is, I suppose, given the social welfare increases of £5 per week or €5 per week, for anybody that is operating PHI, permanent health insurance schemes, again, there's a formula in there for illness benefit, an annualized formula in there for illness benefit. So again, if that's going to increase, just be mindful of any PHI payments that you're processing through payroll could increase as well. But typically these are handled by the administrator of the PHI schemes. So those increases, if there is going to be any to the PHI amount, should be provided by the administrators to those operating payroll. Working from home measures. So they announced an income tax deduction amounting to 30% of the cost of vouched expenses, typically heat, electricity and broadband, incurred while working from home. It's just to be formalised as part of the finance bill with an announcement in due course. What we do know at the moment is what they're looking to achieve out of this, and when they get sign off on the finance bill, is they're looking to make the claim for the income tax deduction a lot easier than it currently is at the moment. So we just don't have any formalized information on it as of yet. But look, when it's announced, we can keep you updated. So just coming towards the end here of the slides, one thing that wasn't mentioned on the budget, I suppose, was statutory sick pay. With this coming into play and due to commence in early 2022, at the moment we're looking at the 1st of January 2022. We're just not too sure yet. I wanted to cover some of these because although it wasn't covered in the budget, it is important for those in attendance to this webinar. So what we do know at the minute is obviously the government has announced a new statutory sick pay scheme to commence in 2022. Paid sick leave for up to 3 days in the first year, 2022. And then this is planned to increase to 5 days for 2023, 7 days for 2024. And then when it's in full operation, it'll be at 10 days from 2025. The rate of statutory sick pay will be calculated at 70% of the employee's daily rate, capped and up to a maximum of 110 per day. Now, we're still awaiting confirmation from the Department of Enterprise, Trade and Employment on what the definition or what forms part of an employee's daily rate. So we don't know the specifics around that yet. But what we do know is it's going to be calculated at 70% of that daily rate, capped at a maximum of 110. So to be entitled for the paid sick leave under the new scheme, you must be working for your employer for at least 6 months, and that absence must be certified sick. Employers are allowed to apply top-ups, and statutory sick pay will not be reported to revenue via the PSR. And finally, gender pay gap. So there's no confirmed date as of yet, even though the Gender Pay Gap Information Act of 2021 was signed into law on the 13th of July this year. It is due to begin in 2022. What we don't know is if it's going to be reportable in 2022 based off 2021's figures, or if it's going to be introduced in 2022 but not reported until 2023 based on 2022's. We just know it's coming, and at the moment it's sometime in 2022. So basically, gender pay gap, it's organizations must report the pay differences between female and male employees. Employers will be required to provide an explanation for the reasons behind any gap, and employers will be required to provide an outline of measures being taken to address any gender pay gap. So it's pretty much about identifying it and outlining what measures you're going to do to reduce that gap. Under the Act, employers will be required to publish the following data on their workforce. So they're currently asking for 5 key bits of information. The first one is the mean and median gap in hourly pay between men and women, the mean and median gap in bonus pay between men and women, the mean and median gap in hourly pay for part-time male and female employees, the percentage of male and of women, of men and of women who receive bonus pay, and finally the percentage of men and women who receive benefit in kinds. A lot of information in there that's going to be needed. And what we do know is the reporting obligations will be implemented on a phased basis. So I think they're taking this, I suppose, from the UK approach. Gender pay gap reporting has been in operation in the UK since 2018. And from there, we saw that it was issued on a phased basis. So from the first year and maybe for the first 2 years from its enactment, it'll only impact those with employees of more than 250. 2 years from the date of enactment, it'll go down to employers with employees between 150 and 249. 3 years from the date of enactment, it'll go down to 50 to 149 employees, and any organisation or employer with less than 50 employees will be exempt under the current obligations. That's pretty much it, guys, from the slides. Not a huge amount payroll wise, but I think the changes that did come in are very welcome. We can see that from the increase in I suppose the disposable income that's going to go back to the employees. So I'd like to just finish on Q&A, guys, if anybody has any questions, and I'm just going to take myself back onto camera. Hopefully everybody can see me there and still hear me.
Oh, very quiet tonight.
Any I hope it's not. I hope it's not nothing to do with the time and time of it. I know guys are checking any questions in on the chat, which I haven't seen. I don't know if anybody has put any questions in there, but if you want to unmute yourself, ask any questions. We're going to have one at least. Oh, any in the chat?
It's really a good news story,
I could
Niall.
hear someone.
Oh,
Yeah, will we be getting a copy of the slides?
100%. We'll be sending out a copy of the slides probably at some stage tomorrow, along with the recording.
Deadly.
Just from curiosity, why do you think that statutory sick pay will not be reported to revenue via PCR? I'm just wondering.
Oh, the PSR, good question. It was a question that we didn't really want to challenge revenue on. It was an announcement that came from revenue off the back of a PSDA meeting, which is the Payroll Software Developers Association meeting, and it was announced to them 2 weeks ago, kind of last minute, where revenue officials said that they will not be requiring it to be reported on the payroll submissions each pay period. So we didn't really want to challenge it because it was very welcome news from those operating payroll that it's not an additional field we have to report.
Okay, thank you.
I think probably the main reason, maybe just to follow on from that one, the main reason probably is because there's no reclaim on the statutory sick pay like there used to be in the UK. It's an amount that employers are going to have to pay if they don't already have a sick pay policy or a sick pay scheme in place. So I think for that reason, it doesn't need to be reported to revenue and in turn passed on to social welfare, because they're not going to be repaying any amount back.
Okay, thank you very much.
No problem. Good question.
On the statutory sick pay, will that work? How will that work alongside illness benefit? Will employees, will employees who are receiving illness benefit and statutory sick pay, how will that work?
Good question. At present, the main reason why statutory sick pay is coming in, I suppose, is to give employees that level of security where if they're in an employment on which their employer doesn't operate their own sick pay scheme. I think stats recently showed around 40% of employers don't have their own sick pay policy. So obviously for those who do, if those stats are correct, those 60% of employers that do have one, that's fine, you're covered. There's no need to claim. This is more to I suppose remove the state's requirement or the state's need to provide illness benefit for those in employment, and it's more to pass the onuses on to the employer. If you don't have a sick pay policy in place, this is going to be the statutory one that's going to cover. So I don't know if there'll be a crossover between the two of them. I think it's probably to bring the numbers down of the state provided illness benefit and pass it on to an employer cost.
No, and just in relation to the statutory sick pay, like you said, the developers were meeting. Like, do they foresee that this is going to complicate? That there's an element of illness benefit being offset against a different type of taxable, non-taxable element in the statutory sick pay? Is that where it might go in terms of this recording what's going through payroll and breaking it, now having to break it down into different elements?
Yes. We were lucky enough, I suppose, to get a little bit of insight into kind of like draft slides of what the software might look like. Most payroll softwares have a sickness or an absence tab. A lot of it isn't being used at present, and what most of them are looking to do is most of them are looking to put in the annual statutory amounts. So that's going to be the 3, the 5, the 7, or the 10 days, and it will be formula based. So you will be able to determine what the daily rate, the employee's daily rate is. Obviously, we need to know the definition of the employee's daily rate as it stands at the moment. And when you enter that in, it should be a simple case of entering the amount of days, like a unit based entry, as opposed to hours or a value. You'll be putting in a unit base of 1 day, 2 day, 3 days. It'll work the calculations out for you. But in relation to, I suppose, how it's going to work with other types of illness and any policies that employers have at present, whether it's top-ups, etc., we have to wait and see. We really have to wait and see. It wasn't announced in the budget, so there is still a lot of uncertainties of how it's going to actually be implemented. All we know is, I suppose, from those slides of the legislation behind it, what it's actually going to be, how it's going to work from a payroll point of view, is still a lot of questions.
Okay. And a second question, gender pay gap. Again, just based on your meeting with the developers, let's try to get a little bit of insight. I was keen to know, are developers starting to work to deliver the required reporting that will come back to payroll? People.
Yeah. I do know that a lot of the payroll softwares at the moment don't have mandatory fields for gender. And one of the issues I suppose to have is around diversification. So the fact that the state only sees male and female is there's a lot of questions coming in about that. But at the moment, most payroll softwares do not make that field mandatory. And I believe that for any of the year-end updates that are going to include the 2020 updates, they're going to now make that field mandatory. So you're not going to be able to create an employment record without selecting male or female. In relation to the finer details as to how it's going to be reported, or what the software is going to do to assist providing that data, I haven't had any concrete information on it yet, because they were particularly focusing on statutory sick pay, which they believe is going to come in first. Gender pay gap reporting is something that we're looking at. It's going to come in 2022, but we don't know which year the reporting is going to start. So it could be 2023 reporting on 2022. So the software developers might be off the hook in relation to providing updates at the end of this year for next year's software. They're really focusing on the statutory sick pay element of it based on what they know now at the moment. So yeah, what reports and what functionality they're going to have in it, hard to know yet, because we just don't know the presentable format of it yet.
Yeah, thanks very much.
No problem. Thank you. I'd like to think 1 or 2 questions lead to then a few more people coming in with questions. But any more in the chat there, guys, or anybody want to unmute?
No,
Niall,
there's nothing in the chat.
you touched on it there a second ago, Niall, just in terms of the gender pay gap reporting and, you know, male or female. Is there discussions in place of how to deal with individuals who don't identify as male or female?
There absolutely is, and I even want to be careful myself in what I say or what I don't say, but there absolutely is discussions about it, whether it's been lobbied or whether it's coming from software developers, it absolutely is. We see it in play currently in the UK. I know a lot of the UK softwares have updated to allow different different classifications, but unfortunately, as the legislation sits at the moment, from kind of a state perspective, it's only recognising male and female, and that's currently the way that it's operating in the UK, and it's been enacted since 2018, with reports, with employers having to file reports and already submit reports. So in its simplest terms, having only male and female makes it a lot easier to report on. If it's going to be opened to more genders, it's either going to be more difficult to report on, or if you've got a lot that I'm just going to say that are going to be put down as unknown, it distorts the male and female reporting. So it actively is being discussed. How it's going to fold or how it's going to play out, I don't know. I just know in the UK that it's definitely still sticking with just male and female.
Okay, thanks.
Yeah, thank you. Any others, guys, in the chats there, or
No.
No, there's
All
nothing
good,
there in the
Niall.
chat.
we'll apply the countdown music, 30 seconds.
I suppose, guys, it is a lot of information to digest. We completely appreciate that the information has only become available today. So if you do, once these slides are shared with yourselves on the recording, if you do rewatch it or any questions pop up, please do reach out. We're always happy to help with any questions that you have, be it in the WhatsApp group or through email.
Yeah, I think on that last, I think I'm still sharing that question slide there. So you've got direct contact email addresses there for myself and Aine as well. And as Aine said there, yeah, the groups that we have, and again, always visit paycheckplus.ie, guys. We'll be keeping everybody informed and updated, especially if there's any changes to any of these when the finance bill comes around.
Thank you very much, Niall.
Perfect.
Thanks so much.
Thank you.
Thank you very much,
Thank
everyone.
Yeah, thanks, guys.
I think we're good
Thanks,
good
guys.
to go. Super.
Because
That's brilliant.
Thanks,
we'll
everyone.
get the slides and
Thanks.
video out to you in the next day or so.
Thanks very much, Lisa.
Perfect.
Perfect.
Thank you.
Thank you
Thanks,
very much.
Super,
everyone.
guys. Thanks for your time.
Bye.
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 Bye.